Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for January 10th, 2026. I'm doing this late night Friday. It's almost Saturday. By the time I post, it will be, because I got a busy weekend and I'm heading out to that JP Morgan healthcare conference in San Francisco. Really look forward to that. It's a extremely big meeting, and as I've been talking about in some of my daily videos, it's caused all kinds of volatility in LABU and other biotech ETFs because typically it's when a lot of action happens and a lot of takeovers occur. So thanks for joining me, and let's get going. Just to summarize the week that we just finished, it really was a great week for the indices with all kinds of new highs. But rotation continues at the sector level, and based upon where you're sitting, it was a good or a bad week. And even Friday, which was another strong day in the U.S. markets, there was some mixed outcomes. Again, my name is Jeffrey Scott, market MRI Pro at gmail.com, Google Group Top Down Trader, and email and websites Market MRI Pro. As always, these videos are for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. I do these videos to demonstrate my tools for top-down analysis and how I use them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools for multiple platforms, but I am an independent trader. I will be speaking at the Metastock Summit that starts on Monday. I'm actually at 10 a.m., which means 7 a.m. in San Francisco time. And I'll be presenting my style of trading using the new Metastock app that came out. A lot of the functionality at a lot lower price, mostly because all the tech stack, the charting, the scanning, the data are a separate purchase through Metastock. But if you already have Metastock or considering it, or if you need data from outside the US, it's just a great platform, very stable platform. I'll put links in the remarks section for where to register. Really appreciate if you sign up. Everybody that signs up for my session, whether you attend or not, will get a video of a seminar that I'm going to do online over the next couple of days of how I trade options. Whether or not I do it just for me or I invite some friends, I haven't decided yet, but I will be sharing that with all the registered attendees. If you're looking for the wealth charts video, it'll be out Monday morning. I'll do it when I get to San Francisco on Sunday or Monday morning. My Google group is called Top Down Trader. This is where I send out notifications of when I post things and give some free programming, seminars, etc. Consider joining. Just go to Google Groups, all groups, and sign up. I will be moving the group to Discord, and everybody at some point soon, and everybody who's a member will just be moved over for free. Do we have a recession in the near future? It's going to happen eventually. And why do I even look? Because whenever we have crossed underneath the zero line and crossed back up, it's followed eventually by a recession every time going back to the 80s. Well, why would it be different this time? Here's a 10 minus 3 months, 10 minus 2 year. You see the same exact pattern. Now, the diffusion index, which I think we get updated this week, yes, we actually was updated Thursday. Oh no, it's updated the 15th. I'm sorry, I was right the first place. Coming week, as long as it stays above minus 20, we're probably okay. And it was minus 8.8. Why do I say that? Because if you look at all these gray bands on both the top and the bottom, which are recessions, you find our productivity as measured by this diffusion index or the manufacturing output is below minus 20. Well, we're not close to minus 20. And then the other thing that happens at recessions is we spike in our credit tightness, and we don't have any evidence of that either. So we got a recession coming, we always do, but it's not imminent over the horizon. What we are going to get this week is a lot of news. We're going to get a lot of Fed heads. So I counted up 3, 5, 9, 12, 14 different Fed head speeches, and I'm sure I missed some of them. Um, what are we going to get from data? Well, we got some old data, but we also get the CPI for December. We get PPIs for November. So it doesn't say delayed, so I wonder if it's delayed or not on these last two here. We get home sales, we get jobless claims, and we get industrial production and capacity. So this is a big news week. We also get to launch earnings. So some big names Tuesday before the bell, Delta Airlines. Wednesday before the bell, Wells Fargo, Citibank. Get a look at on Thursday, Goldman, BlackRock, and on Friday, more regional banks, PNC, M&T, State, and Regions Bank. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. All right, let's go take a look at the charts. So the tool that we use is my tool. It's called Market MRI Pro. It's the culmination of all the things that I've done in the market, the things that I've learned from some really smart people. And then I have a great programmer partner, Praveen, who built it, and we continue to update it, and I'll mention some of the cool things that are coming. Just for a quick note, if you own the program and you're still in 3.3, you have a problem because we're in 3.21. You have to switch to the Windows Store version of the program. That's the one that's being updated, and you're missing out on a lot of cool features. Just email me or Praveen, and we'll get you hooked up on the new version. Doesn't cost you anything. We'll give you the link. For those that are not current users, if you go to the Windows App Store and search for Market MRI Pro, you can actually get a 3-day trial at just a few bucks. Why do we charge a few bucks? Because I got to pay for server cost. And if 1,000 lurkers went in every day for a week, it would break the system. It probably wouldn't break it, but it would certainly break my bank. And this way I only get people that are actually thinking about going forward, downloading it because I think it's $7.95 for 3 days of data. What we see on the market breadth tool, if we look up here in the upper left-hand corner, the leading four are the major indexes. The Q's up 1%, Russell 0.76, Spiders 0.6, and Diamonds 0.51. If we look at the 5-day move, Russell was up 4.6%. Woo! Over 2 on the Qs, and the Diamonds and the Spiders were up 1.6, and we closed near the top of the range. Russell came off a bit, but still above the midline. The dollar is showing some strength, up 0.22%, while Bitcoin was down 0.7, kind of flat on the week, and volatility was down 1.9. I like to say that new highs in the market are built on new highs in stocks, and we could see that the number at 1 year of new highs minus the new lows is over 100 on the NYSE and getting close on the NASDAQ, so that firmed up some. Now, what wasn't great is if you look at participation. Let's just look at the advancers tonight. Only 58% of the S&P 1500 were up on Friday, 45% of the NASDAQ, and 57% of the NYSE. So a little bit more than 50-50, but on a really bullish day in a bullish week, we might have expected more of that. If we look at leadership on the S&P 500 sectors, we can see materials, technology, and utilities led, with discretionary and industrials and staples right behind, and the laggards were healthcare and financials. To me, this was another day of data center strength. So you need materials because of uranium. You need technology because of chips, because of memory, because of SSDs. You need utilities because of companies like CEG, OKLO are involved in the utilities and potentially the nuclear reactor space. So all of these in the industrial, somebody has to build them. So all of this goes together with a strong data center story. If we look at what led, well, home builders led because it turns out $200 billion of buying mortgage bonds by Donald Trump, although I'm not sure everybody understands exactly what's happening, was enough to lower rates and the lowest they've been in a couple of years. And we could see home shares were up big. Semiconductors, silver, copper, metals, mining, aerospace, defense, data centers, all were up over 2%, followed by uranium, infrastructure, clean tech. Again, a big story towards those data centers. If we look at what lagged on the day, not much. The worst performer was discretionary, then exploration and production, and then cannabis and leisure and entertainment. Biotech was down, although when we look at LABU, you'll see some pronounced volatility, probably still related to whether somebody is actually buying Revolution Medicine. Timing brief, it's all in. The daily, we'll talk about the price and volume action when I go to the index charts, but the daily on all of the indexes is showing green, which means we're in a buy signal. If I look at the weekly, we are in a buy signal in all four. And if I look at the monthly, so when all three time frames of my four major ETFs are all saying be long the market, I'm not short. Will this eventually stop? Yes. Are we getting overbought? We're getting there. And we'll either pause to refresh or have somewhat of a pullback. But right now, the market seems to be strong, and perhaps what's avoiding the pullback is that fierce rotation underneath. If we look at the market indexes, so this was a prior high, and I had a question about this was going to be a false breakout and lead to a drop in the market. Well, we had a decisive breakout here, which would have been Tuesday, I believe, followed by a little bit of retracement and then further strength today up 0.66. And if I look at predictive price with seasonality, it's in a good seasonality time of year. Now, this price has got this old high level at support. It also has a 17 and 20, simple and 21-day EMA, which run together, a 50, 100, and a 200-day underneath. I think these spiders look strong. And oh, by the way, all-time closing high, all-time trading high today. Qs don't look the same. The Qs have had the big run up, but they're kind of in this wedge. Now they broke out today, so we could be cautiously optimistic here. We'll have to get through the old highs, but even a run up there would be a big deal. So the Qs are still a bit off the highs, looking like they're breaking out today. We'll have to see, and they were up 1% leading the market. If we look at the diamonds are at an all-time closing high, and they set during the week the all-time high. And they're still in a seasonality predictive price strong market into the middle of February. What sort of surprised me, and this almost, I think this snuck up on me, and I do have a lot of small caps, and I have some IYM and IYR in my long-term money, is we actually broke out to all-time highs on the Russell today. Now, I know a lot of people don't care because all these stocks in the Russell don't add up to probably Google's market cap, but it's an impressive move here. So today in Russell, all-time trading high, all-time closing high. Markets that set all-time highs seem to keep going up and set more. Volatility dove today, and that's good because that goes along with a strong market, down 6.21 in the VIX futures. You could see seasonally, we're going to get into a period of time where it looks like volatility will get higher. And the dollar firmed up a bit, and maybe it's going to break out here. Now that looks like a sideways move, and this could be scary if you're up, own a lot of U.S. equities. But if we just step back, we could see that the dollar is still way off the highs, and it's not a big factor right now, in my opinion. Could change. If I look at the commodities, and let's blow these up. Gold and silver have been on fire and continue to be extremely strong, and trying to go back on set new highs on gold. Not yet, but up 0.72. So what looked like it could have been a climax run, especially in silver here, has turned out to be just the beginning of a consolidation, maybe a flag, and maybe we break out and go to higher highs here. Silver gapped up, was up over 3.8% today. Oil, shooting star. Typically, when you see something like this, the next move is down. So we had a gap up, traded all the way up to that 200-day moving average and failed, and closed within the triangle. Not a bullish looking candle. Could go higher. At least it doesn't look like natural gas, which is back down to its lows. And then both the 10-year and the 30-year, something favorable, were down a bit. 0.26% down on the 10-year, and the 30-year were down on 0.76. So these are part of why rates came down on housing, and the bond market is what's going to control the far end of the yield curve, so not a big surprise. Now, if we go into some of my other breadth tools, the buckets will show that we're getting ripe. We're not at a we must reverse yet, but we now got 16% of the NYSE above the Bollinger Bands, only 8% on the NASDAQ, that's the laggard, 13% of the Russell, and 16% of the S&P 1500. So we have to start thinking, are we going to have a pullback or some sideways digestion coming? But not yet. This is not a number that says it must happen. When we get to 30 to 40, yeah, it's a different story. If we look at the market breadth tool, new highs on the NYSE, a nice day on the NASDAQ. Stocks above the major moving averages are not quite at a reversal area, but have increased on the NASDAQ, on the NYSE rather, composite as we had strength. The new high, new lows are positive on both, and the AD and up-down volume positive on the NYSE, but still, yep, that's today, negative on the NASDAQ. Super strong day in the market, but not everything's participating the same. Now, another market breadth tool I like, and I'll probably consolidate these somehow on one slide, maybe, is this 13-week new high, new low. So I like to highlight the last day and left click, and you can look down, you can see it's 0.86 on the spider. Below that, it is 0.90 on the S&P 1500. To the right, up top, 0.74 on the NASDAQ, and below that, 0.84 on the Russell. Again, none of these by themselves say we're going to pull back on Monday, but we are getting closer and closer to a range where we're getting extended enough that we might expect that. One thing that I thought was interesting today is just the broad expansion of the positive sectors. You could see that we had a new buy signal come in on technology, which had been weak for a little bit. We also had a new buy signal come in on Thursday for staples breaking out. And notice there's not a whole lot of negative sectors right here. One of them is real estate, and the other one is utilities, the defensive plays that are probably not equally participating in these rallies. Utilities is a little bit weird here because utilities do have some of those plays that are supporting data centers. If we look at some of my favorite stocks to look at each night, again using the timing model, and let's blow these up, like this, not literally or figuratively. Amazon, we've talked about it. It's one of my positions. Nice move this week. Higher highs, higher lows. Nice new uptrend. Hope you're enjoying the ride with me. Apple had a bit of a line in the sand drawn here with a bit of a hammer-like candle. I'm not sure if it's got too much topping tail to be a hammer, but that could be a reversal, so that'd be something to watch. Superstar Google took a position in that this week, which I mentioned a couple days ago. Closed off the highs, but I believe it's sitting at all-time highs here. So all-time closing highs. For those that are new to me, my candle convention is simple. A white candle means a higher close. A red candle means a lower close. An open candle means you closed higher than you opened. And a closed candle means you close below where you opened. So you can learn so much about what happened that day by just the shape of the candle, the color, and whether it's open or closed. So Google looks great. Meta, trying. They kind of drove some money into the nuclear space today when they signed a couple of deals for their data centers on the energy side. Trying to, but still in a sell signal. That was Meta, and I hit the wrong button. Dum dum dum. Netflix, no. Netflix is in a arbitrage deal with Paramount over Warner's Brothers Discovery. Um, Netflix has great seasonality in first quarter, and we're going to miss it this year because I don't know how to play seasonality in the setting of a potential buyout. Tesla, nice day today, trying to recover its moving averages. We'll see what it does. Now, on this slide, if you're wondering what are those moving averages, you could always look in the left upper corner, but you could see the yellow is the timing line I use, which is a 30-period WMA. And did you know that the 21-day EMA in brown, which is what IBD Live uses and a lot of smart people, kind of runs along with that 30 period. I thought that was cool the first time I put them both on the same chart. Then again, it doesn't take much to make me happy. Um, sort of joking, but hold on one sec. I love when my alarm goes off and says there's a person. It was a bird. Big bird. All right, so Tesla trying to recover. That looks pretty good. Not yet a buy. Nvidia, I don't know. You would think data centers doing well, so would Nvidia, but sort of stuck here right above the timing model line. I'll go neutral. Microsoft, trying, but still above the line, and boy, did this thing sell off hard. And then I mentioned biotech today. Last night I had disasters. I had a stock that, I bought because I did what I don't like to do, which is called FOMO. And this, I'll hopefully remember to look at it later. It's AXTI. Now, I've made a lot of money on the stock, but it had a pre-announcement after hours on Thursday and basically said that they were going to miss their numbers. So overnight it dropped from 25 and a half down to 17 or 18. And I still would be making money at that level, but I would have given up a lot of money. And somehow it closed today at 23.37. I had no idea what it did. Shame on me. It was in the semi space, I believe. But they actually have some rare metal that's necessary, a rare mineral. I'm not sure it's a metal or what, necessary for semiconductors. So they have an issue with getting licenses to ship it out of China. But that one blew up. Reddit, strong start to the day. It blew up. But then I had things like OKLO, LABU at one point of the day was really strong. HWM, which we talked about, did very well today. But LABU has been whipsawing around every time a rumor comes out about either Merck or AbbVie or somebody buying Revolution Medicine. If it's a sell on the rumor or buy on the rumor, sell on the news, JP Morgan is Monday. So if we don't pop at the open, I'll probably take more off. Um, Typically, a lot of those transactions will occur by Monday morning. Transactions meeting Big Pharma buying biotech. Big Pharma stronger than biotech, just flagging a little bit here after a nice run. Here's the data center ETF. Beautiful breakout, beautiful run, all-time highs on that today. So, things like that's where my OKLO came in. And, sometimes you buy things for various reasons and you have a nice outcome. And Oklo's one I played off and on. I bought it early in the week because of the data center move. And it was one of the companies today that, let's see, something about a contract with somebody for nuclear power for data centers. So data centers were great. And then the one that sort of has been volatile as heck has been ITA, which is still strong, and HWM is part of that. But Trump has been using defense and aerospace as a as fodder for some of his tweeting about executive compensation, and then he's going to increase military spending to 1.5 trillion, which causes it to go up. So we'll see what happens to ITA, but it still had a decent close today. So one other piece that I typically look at in my market and sector analysis is my ratio charts. And the ratio charts are different than the sector timing. The ratio charts are going to make a ratio of the underlying versus the spider. And that neutralizes what the dollar values are. And I want to know what's outperforming. So materials really outperforming. Energy was outperforming, but pulled back some. You can see staples and discretionary are both coming back. You could see that industrial is super strong. Energy weakened a bit today. Tech here, not been a big performer of late. So this is an hourly chart, and it gives me a sense of what's working now. Now, I always like to start. I'm a top-down guy, and why am I in data center stocks? Because I was watching the ETF, and a lot of the stocks were showing up on my analysis. Now, we've got a new feature coming. I should get the pre-release tomorrow. And those of you who are not in the Windows Store process, please get there, because when we push it to everybody, if you're not through the Windows Store, it won't be pushed to you. And it does push automatically for most of us. Some of us have to do the right click on the Windows Store and go and hit updates and downloads and then do check for updates. But most of the time I'm getting my updates automatically. I asked Praveen, this is how great it is to have sort of a closed system. About a week and a half ago, as we started looking at data center coming back, I said to Praveen, we've got all these ETFs, way too many ETFs. I probably shouldn't have done that. There's 3,877. Wouldn't it be cool if I picked an ETF and clicked on it, and it would open up all of the stocks that are in that ETF? And so you could see a list of the current holdings. Well, it turns out that our data provider actually has the ETF hierarchy. Now, do we really need 3,877 ETFs? Do I need 5 ETFs leveraged on OKLO? No. So we're going to thin this over time, but I will have the beta version of our ETF drill down, which would allow you to pick an ETF and then see the constituents. And I'll call it the reverse ETF tool, where if I was sitting in the impulse list, which is the biggest list we have, or any of the other lists, biggest list of stocks that we have. But if I'm sitting in the impulse list, I'll have a button to push, and that if I pick a stock, it'll show me stocks that are its peers. So I could look at other stocks like the one. If mine is already overbought and I missed it, maybe some of the peers might be appropriate. So big feature upgrades. Praveen is a freak of nature when it comes to program. He's amazingly great. Boy, am I blessed to have him as a partner in this endeavor, and soon to be announcing the third partner in our little shop. Very excited about that coming as well. So for those that have been here before, I do most of my shopping in the base list. The base list will consist of the NYSE, the NASDAQ, and the Amex constituents, and we filter them every day for $1 and 100,000 shares. Whichever list I'm picking here, and just to show you this, everything in the database has a sector and an industry group. ETF's not the best choice. If I hit, for example, BTU, which I talked about not long ago as a potential rare earth play, and I just look at BTU, Peabody Energy, it tells you sector and industry group. So Whichever list you pick, if you go to top down, we put those stocks into the various sectors and industry groups. So let's look at the top down and let's look at how much it moved today. And the leadership was materials, industries, and tech. Now this is different than the S&P 500. Why? Because I've got 3,600 stocks in those three sectors. Excuse me, in these 11 sectors, not 500. So it's a much broader look at the markets. Then I could come over here and I could take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. So now I've got 10 industry groups from the top three sectors yielding 286 stocks. Then I could come in here and put a filter or two, $5 and 500,000 shares, and I bring it down to 168. And then I'll rank it by my positive impulses or up impulses. Let's just take a look at some that come up to the top. Now, most of these or many of these have already run. Yep, I'll skip that one. WFG, I'd rather buy above the 200, and I'll keep going till I find something that looks interesting. Basic materials, Suzano, so it's Argentinian or some other foreign. Let's see what it says. Eucalyptus pulp and paper products in Brazil and internationally. Boring. SMTC. That's a nice looking chart. Clear uptrend. Bit of a sideways move. It looks like it's breaking out off of the 50. You had volume momentum breakout in a CPR today. Good relative strength in OBV, and you're not extended. Then I would come up here and look at when our earnings, not to March 12th. We have 43 cents versus 40. Not much growth there. PE of 45, no dividend. So I wish it had more growth. You could see it does typically get some modest earnings surprises. So Semtech doesn't look bad. I might go over here and see if there's any news. Nothing that tells me too much. So I would go down the list, RAL, basing after a big run. And this is more my style. Here is a stock that broke out, clear uptrend, has pulled back to the 50 and had a big day with momentum off of the 50 with decent volume. You got momentum, breakout volume, route to strength and OBV coming around. That one looks interesting. LPX, big breakout. I thought this was wood timber. Let's see. Building products. Yep, wood products. So why is this up? Because I bet if we had the peers analysis, you'd see a lot of home builders are its peers. And if we're going to start building homes, you can expect copper to be up, wood to be up, flooring to be up, paint companies to be up. So a lot of things go up, not just the home builders. BLD, Top Build, this has been a great performer. And boy, I like this one a lot. See, I found three stocks that I said I like a lot, and I haven't even gone to my favorite tool yet. Did we just break out? Well, that's not a good line. We take that line away. I could just put the horizontal one. I got to pretend. So we just broke out of what had been resistance. We got super strong seasonality. Woof. We got massive volume, CPR, squeeze, momentum breakout. We got a double momentum. Woohoo, my favorite signal. Relative strength, OBV. Let's make sure we don't have earnings coming tomorrow, not to February 24th, 436. So earnings growth not there, but we'll be looking for more surprises. So top build technically looks really interesting here. So that's three. ASPI, another nuclear isotope company. This time I decided not to play the little guys and I started playing CCJ a few days ago. And CCJ to me looks like it's potentially topping here. We'll have to see what it does. ASML, expensive semiconductor stock has broken out. Applied Materials, semiconductor manufacturing looks the same. AEHR, all right, so we had a big uptrend, significant pullback, and we broke above the 50. Predictive seasonality here looks pretty good. Good volume, good relative strength in OBV, not extended. And it's not about earnings, but earnings aren't until April, and they had earnings today, 4-cent loss versus a 2-cent gain. But that what matters is did they beat expectation? And it looks like they had a 50% surprise, and not on revenue though. So I would go into the news and why did it zoom higher? I click on it. Motley Fool will open up and you can read it yourself. That'll automatically happen with the program. So AHR, which has long been one of the IBD high growth stocks. So that means right now I liked SMTC. I liked MTSI, I believe. Yep, it's probably my favorite one. LPX and AHR. So let's highlight these. And BLD, can't forget that one. LPX, MITSI, SMTC. And I'm going to add those. And I'm not sure it's empty. But if I wanted to put those in my buy watch, I would just add them to my weekend buy list. That's how easy it is to build a watch list. Now, some of us don't want to do the top down. We want it handed to us. So there's another way to do it. Let's go back to the impulse list. And I've got so many lists, I'll go use the drop down. Let us clear my filters. Let's look at A+. These are my favorite stocks. These are that double momentum signal. So what the requirement for this scan is, my weekly bongo says I'm in an uptrend. Okay. I have to be these two blue dots above the yellow line in a row. And the blue dot is momentum, the yellow line is the squeeze. The relative strength has to be above in green, the moving average in yellow, and the OBV in white has to be above the moving average in yellow. I don't really care about the high jump when I'm touching the 200. So I'd rather buy this above the 200, but I might do some research. I'd want to know when the earnings are. And I can see the earnings are not to February 19th. So that's not an issue. Now, quick thing about the earnings tool, if I highlight it, it goes away when I move. If I click on it, it stays when I move. And then over here is the news. And you can basically go through and read any of the reports that you want to help you make your decision. Here's Top Build, which we looked at before. I like that one. BLDR, Builders Source, Builders First Source. It's been in a downtrend. Let's look at the weekly. The weekly looks like it's getting ready to run. I just don't like buying things in downtrends. And right now, I'm not convinced yet. Might turn out to be just fine. BUD, Budweiser. Beazer Homes, the homes were strong today. All of them will have the two dots. All will have the relative strength in OBV. All of them will have the weekly bongo. CCS, Century Communications, kind of sideways moving to me. Celanese, not yet above the 200. CNM, okay, core in Maine, breaking out above the 200, double momentum, worth a look. Corrections, CXW, Core Civic, breaking above the 200. So you can sort of see the pattern there. LGIH is another home builder breaking above the 200 or trying to. Keller Morrison Homes breaking out as well. So you can certainly go through that list every night and find some other attractive candidates. Or my classic one that I used to buy was the A trade, which would, I still buy it, which would be stocks that are um, typically have a squeeze, have a breakout in momentum or momentum. Let's take a look at one. Alpha Technology Group, never like to see this kind of a topping tail. But it requires the squeeze, which they had back here. I'm not sure why it's in here today. I'm on the weekly. Nope, I'm on the daily. Let's look at the next one. Bridge Biotech. So this one has got the squeeze in yellow, a breakout momentum, relative strength and OBV look good. It's not extended. It's got the blue weekly bond going breaking out. Bridge Bio has been strong this week. BCC we looked at before. Builder we looked at before, or Top Build, I think that one was. And Builder Source First Source we looked at before. So there is a lot of overlap between the two. And sometimes I'll actually take advantage of that by adding the A's and the A pluses and double filtering and seeing what I get. And now these should be super, super strong charts. RYN, Rayonier, a big breakout. I wouldn't buy it under the 200. PAGS, loose, but just breaking out off of the 50. So there's a number of tricks we can do. Now, I haven't built them all out yet. So you might also do something like, I've got another timing model called Dynamic Systems Long that I better educate people about soon. Put my price and volume, and let's say I want to be above the 200-day moving average, and I want the weekly bond go up. This gives me a list. And this is another timing model that I developed. And I'm not going to do it right now. That one looks interesting, but yeah, that looks very interesting. Sideways move with a squeeze, a breakout in momentum. I think we have it as a signal. Let's see. All right. So that's these little diamonds that it puts on the chart. Just a fast moving timing system that I created. Take it off right now. All right, well, I'm getting tired. I think I've shown you how I look at the market, the various tools that I have for market breadth and top-down analysis. And then this is the power of my program, really is the different filters you could play with to identify the types of stocks that you want. Old-fashioned way of doing things, I got price and volume already checked. Let's pick pullbacks in an uptrend, hit OK, too tight. So let's strip this down, try that again. Pull back in an uptrend, OK. So we got 1146. Now I want to put price and volume in to get rid of smaller, not actively trading things. I'm down to 641. And let's only look at things that are above the 200-day moving average, because you've heard me comment about it negatively most of the time. Down to 533. Now let's rank them by positive impulses. Let's just take a look what we get. SPRY, ARS Pharmaceuticals, looks like a fresh breakout above the 200. It's got massive volume, all my blue dots, relative strength and OBV. I like that one. SMFG, a bank. Paper, WY, who harbors. So what I'm hoping you see is that by running these various scans, we're bringing up stocks, SMTC, some of which are probably actionable. Have a great weekend. I may do another um, presentation on Sunday, depends upon how the JP Morgan meeting is going. If there's anything hot that I see, I'll be mentioning it in my nighttime videos. Please think about coming to the Metastock, and I'll put the link in it to register. Even if you can't come, please register. I don't ask for much. I do these for free. I've been doing them for free for 20 plus years. I love to teach. I love to help people. Help me by registering, and that way they'll invite me back again. Take care. Enjoy your weekend, and thanks for following the Market MRI Pro.